Unicorn India Ventures, which has now launched their third fund with a total corpus of 1,000 crore rupees. They've announced the first close of this fund at 225 crore rupees. With two funds under management, UIV has an active portfolio of over 35 companies looking to invest in many more. Joining us is Bhaskar Majumdar, Managing Partner at Unicorn India Ventures. Also joining us in the studio is my colleague Kartik Malhotra. Kartik, please do come in. Let me first take a question quickly with Bhaskar. Bhaskar, congratulations on the first close. Run us through some of the key takeaways.
So thank you, Shweta. So obviously, this is the third fund for us. And as you very rightly said, this is the first close we did at 225 crores. For us, this is the first fund where we have a substantial capital coming in from the US. And that has been a target area for us to focus at the US markets, the international markets and US in particular, as we look at raising the third fund. One of the biggest takeaways, I must say, that globally there has been a natural slowdown, especially for the VC and private equity markets, especially given the 6% tax regime in the Western world. However, so there is in general, there's a very strong headwind against VC as an asset class. However, it's ironical that at such a period in time, there's a very strong tailwind in favor of India. Wherever we've been talking, wherever we've been seeing at the larger global macro, given the slowdown in China, there's been a definite tailwind from institutional investors and foreign family offices towards any India story. So this was a very good balancing act because the geography story was a very good tailwind. The sector story was a general headwind. So between that, we did manage to do the first close, and we are pretty confident in the next 6 months or so, we would be able to do the final close.
Hi Bhaskar, good afternoon. Thank you so much for joining us this afternoon. I think the message that you're trying to give is fairly clear that despite the funding winter, we've seen that India still seems to be right now in the thaw mix of the funding winter. And the perception that you mentioned, I think, is also getting echoed by ratings agencies, by the likes of JP Morgan, by the likes of Moody's, by the likes of Fitch. So overall, India is much better positioned right now in the startup ecosystem, in the overall funding value chain. But there's still a dichotomy between, profitability and valuation. And what we are also seeing on the valuation front, Bhaskar, is the fact that that valuation is being underwritten in the books of many Indian startup investors. Why is that so?
Kartik, it's a great question. And fundamentally, what is happening is something which, we are calling it a valuation catch-up. What typically has happened is, especially in 2021, latter part of 2020, and we all know the macro, there was COVID, the rates came down, people and the larger funds were flush with money. They all wanted to take in a higher risk, higher return asset class, i.e. the startup ecosystem was flush. And this was a global trend. So what fundamentally happened over there was valuations overran. And because valuations overran, companies were basically being valued at a much higher valuations than normally you could justify in a more stable world. Today, what is happening, the message that is going in some quarters is that, the startup ecosystem has slowed down. Well, the startup ecosystem is not slowed down, especially in India. What has happened is the valuations of some of those large companies which had overrun, there is a valuation, what I refer to, there's a valuation catch-up which is happening. What basically means is a company which was valued at, X will now take another 2 years, 3 years to value themselves again at X. And what fundamentally is happening, if you look under the bonnet, is these companies are starting to improve their performances and having to justify themselves. And we are seeing that within this private ecosystem, at the real early stage, which is where we operate, there hasn't been much of a slowdown. You're still getting access to great companies. You're still getting access to very mature entrepreneurs who are starting off. The real slowdown, if you will, has happened in the more matured businesses, companies which are close to $1 billion, companies where their valuations are comparable with the listed space. And therefore, that is where the valuation catch up is starting to happen.
So fair to assume, Bhaskar, perhaps if I'm getting you correctly, is that it's a correction and not really a downturn when it comes to devaluing of startups, which I think is a fair assessment of the situation. But Bhaskar, it's also important in the same breath to talk about some of the emerging sectors in India, and not just in India, in fact, even globally. So I believe that agri-tech, space tech, semiconductors, are your focus areas as well, and these are focus areas for the overall India momentum also right now. So what is the kind of news that we can expect when it comes to UIV getting into funding? And I believe 25 startups are likely to be in your next funding cohort. So what is the kind of headline that we can see when it comes to some of these semiconductor, space tech, agri-tech startups that you're likely to invest in?
And perhaps also, if you could break it down for us, how many of them are in semiconductor space, agri-tech space, and space tech? Because there's a lot of buzz around space tech of late.
Yeah. So let me just quickly take a step back and give you a perspective of the type of businesses we invest. So as a fund, we don't invest in consumer internet. So we stay out of businesses which are, typically they need dollars constantly to keep reaching their business targets. So fundamentally, there are two broad themes we invest in. One is India for the world, which is, B2B SaaS businesses, homegrown in India and then going out to global markets to scale up. The second system, and for which we are known as, is we invest in what we call digital platforms, which are fundamentally companies, which are using this mass scale digitization that we are seeing right across India in every sector, in which are companies which are enabling this digitization across sectors. So whether it be health tech, fintech, retail tech, this is what we are known for. And therefore, our theme in the third fund has not changed. Some of newer verticals have been added. And that is where we are seeing more and more companies now within the agri-tech framework where we are looking to do. We are looking at investments in space tech. The launches which has recently taken place has clearly shown the capability of India to launch, less than a fifth to a sixth of what US companies or the US space technology companies have been launching. And there's a large number of very interesting early stage space businesses we are seeing. Semiconductor is a very difficult industry. It's a very manufacturing, capital intensive industry. So for a fund our size, we cannot be doing in the front end side of semiconductors, as in, in the fab businesses. However, within the semiconductor space, semiconductor, as you guys very well know, is a bit like the automotive industry. So, we are not going to invest in the automotive side of things, but we will actively look at investing in the design, in the auto ancillary equivalent fabless manufacturing side of things. So, we are constantly getting businesses within that area. We have retained on our advisory panel certain people with deep connects within the US semiconductor space, and these are some of the areas which we are looking at.
Since you mentioned fintech, I think the sort of allure that we had of fintech back in 2020 onwards, all the way I think up till 2022. That is a sector that seems to have sort of outlived its growth and valuation momentum. But in the same breath, Bhaskar, I can't help but mention JioFin. The latest offspring of the Reliance company, demerged in fact as JioFin, which again, since you mentioned, you are into the tech platforms, you're into health tech, into fintech, and this now specifically is at the cusp of Bharat and urban India, right? So it's going to be a giant which is actually going to ride on the massive wave of the existing Jio Telecom platform and is likely to further disrupt the entire fintech space. How are you as an investor looking at the entry of JioFin in the overall fintech space?
It's a great question. Fundamentally, what has happened in fintech fundamentally is, fintech companies mushroomed up much faster than the regulatory framework could catch up with. So fintech started to come. It was almost There were fintechs and there was financial services companies, and the two were almost at arm's length. Once fintechs started to become more and more mainstream, and once the companies started to become large, the regulators, and rightly so from a national perspective, started to bring forth within the fintech the same regulation that was there in the rest of the financial services. So you could have four bright tech guys could launch a digital lending platform, and they were unregulated. Rightly so, RBI came with a structure where they said, the regulated entities have to exist if you are doing a lending. So then, only those fintechs which already were within the regulated framework, already those who had their own subsidiary NBFCs, etc., were the ones able to scale up. Today, what we are seeing is, if you will, the coming of fintech into the mainstream, or the other way of looking at it is the mainstream coming into the fintech. And that is where we see a player like Geo Financial coming, who are going to disrupt the whole thing. They are going to be the ones who are going to put in the obviously the whole regulated hat of financial services, but rather than looking at the old distribution method, they are going to use technology, basically as a disruptor. And being an investor in the early stage fintech ecosystem, I think it's a great opportunity. Whenever Geo, Reliance, and or these large enterprises come into a particular sector, naturally, given the speed to go to market, they would be looking at building up their various platforms through acquisitions, through mergers, through various structuring. And I think that gives an opportunity to not just our portfolio companies, but within the entire larger startup ecosystem to grow on the back of these activities.
Any consolidation that you're looking forward to when it comes to fintech players, because there are so many of them in the market right now, and with a big entity like Reliance getting into the fintech service, it's going to cut into their markets. So any possibility of any sort of consolidation in the market as we speak right now?
Yes, it's a very good analysis. Obviously, we have seen that happen in the e-commerce market also. There was a sort of consolidation within the e-commerce market. Then you had not an equivalence, but then you had the Tata Digital come in, and they acquired a majority position in Big Basket. I think a similar consolidation story will pan out in fintech. Fintech again is a catch-all word we use. Within fintech, there is multiple sectors. Some sectors like possibly lending, some sectors like trade finance, these may have matured, but there's a whole lot of sectors within the larger fintech gambit, which again are still at a very early nascent stage. And for funds like us, which are always looking at newer sectors, which are always looking to invest where the big monies have not got in, we see a number of opportunities within the larger fintech. Just to draw a parallel, one of our marquee investments is a company called Open Bank within fintech, India's largest neobank. But when we invested in them, the word neobank itself was raw and unheard of in India. So, although the sector is maturing, within the larger sector, there are always, pockets which are emerging constantly. And that's our job, to source the sectors and companies.
But Bhaskar, do you see the neobank story in India actually maturing? Because I think practically every neobank out there that was, mushrooming in the 2020, 2021 era, seemed to have exited the market because all of them pretty much hit regulatory hurdles.
Quite a few of them did hit regulatory hurdles, but the ones within our portfolio, I must say, were very matured to work alongside the regulator from day one, because we were very clear as investors and the company as founders that eventually financial services will come under the regulatory framework. So there have been neobanks which are working very closely with the regulators and scaling up constantly. And
okay.
The other thing that is happening globally in the neobanking world, and I'd just like to take 30 seconds and explain, is basically neobank is becoming the aggregation platform for newer consumers to come into play. And it is after that you start offering services, most of which are in the traditional banking, to start to monetize. And that's where the India neobanking space is also exactly at.
Since we are talking neo banks and we are talking about a funding winter, Bhaskar, I think it's important also to note at this point that many sort of pundits had said in late last year onwards and the run up until now that days of easy money are over. Now with with 25 more startups that you are likely to fund yourself and opening the taps to your third fund, is it fair to assume that even if days of easy money are over, days of money are not technically over? Startups are still going to get funded.
Yeah, I think it's a very good line, Kartik, you've used. Days of easy money are over, but days of money are not over. In fact, for funds like us, and again for matured entrepreneurs, I think we didn't want, but this natural slowdown that has happened in the cycle has been good in a way because India being India, and we all know when there is a bull market, what happens. We almost started to see, AIFs and venture funds mushrooming up on a daily basis. I think that will stop. Investors in funds will look at matured fund managers, folks who have been there, done that, either as entrepreneurs or as senior execs. Similarly, on the entrepreneurship side, people just thought, it was a walk in the park entrepreneurship. They realized it's a long hurdle. So I think this natural headwind or the cyclical curve, whatever you want to call it, has been good for the overall industry. And there's a clear maturity in types of fund managers as well as in entrepreneurs who are now coming into play.
All right, Bhaskar, in a country where we often and very rightly celebrate unicorns and unicorn feature prominently in your company as well, we have seen a slowdown. And it has slowed down to a point where at this point in August of 2023, India saw its first unicorn in Zepto. My question is twofold. A, is this good? Is this bad? How do you read this? Although there's been some sort of slow growth or slow momentum as far as companies turning unicorn is concerned, there is greater push and thrust towards sustainability, profitability. That's number one. Number two, which are the soonicorns that one should be eyeing at this point?
Without getting into names of which are the soonicorns, I think today what has happened is investors and or the investment world is no more carried away by high marketing spends and the brand value of the companies. It is coming back to brass tacks of path to profitability, what the cash in the companies, what the core businesses are. And within that, we can see a number of soonicorns, within our portfolio, and I'm sure within the portfolio of other VC colleagues as well. Fundamentally, the moot point that has happened is, you're right. As I kept saying, there had been a valuation overrun. It had almost become that you had to become a unicorn had become the holy grail for existence for a startup rather than building the business. And I think these are cyclical curves which we all go through, both in the startup world we go through, and we've all been through bull run periods in the stock market also. So that doesn't mean the stock market is going to die or doom and gloom about the startup world. It's just a correction of a natural cycle that happens. And that's what we are experiencing. I think the startup founders, the unicorns, all of which were there, have now become much more business focused. We are seeing it in our portfolio. Founders are much more focused at path to profitability, building teams, growing businesses, rather than always looking at the next round. So it's a natural correction which has already happened, and I think there's a learning for all of us in this.
All right, and before I let you go, for all young entrepreneurs watching out there today, what exactly does it take? What value in a startup does it take for Unicorn India Ventures to invest in them, to have Unicorn India Ventures back them at this point?
As I keep saying, you have to love what you're doing, get into it to build a business, create some value, and don't think about the exit and the valuation. That will come if you're building the business. And fundamentally, that's what it is. We are not backing entrepreneurs. We are not backing people who want to try out entrepreneurship. Entrepreneurship, we feel, is a one-way street. You got to burn the bridge of return and then only get into entrepreneurship. And for us, because we go in so early, we are always saying that early stage investing is an art and not a science. And therefore, that's the DNA of the entrepreneur we're looking at. Everything else follows from there.
All right, so you're looking for entrepreneurs that are artists and not scientists, perhaps people who are more innovative as opposed to people who are more technically driven. That would be my takeaway. Bhaskar Majumdar, thanks very much, sir, for taking time out for joining us on that story.
Thanks, Shweta. Thanks, Kartik. Good to
Thank you, Bhaskar.
Thanks for having me on.
Thank you.